I know where my stop is because, if that zone breaks, then that zone of support and resistance is no longer valid. Therefore, I want to be out of the trade. And then your target is a little bit more subjective, but I have other ways of identifying that.
So Ross Maxwell is a trader with over 20 years of experience. Good to have you here on the podcast, Ross. Welcome back. And let's discuss trading.
Hi, thank you very much, Etienne.
Tell me a bit more about kind of what you're doing these days as a trader.
Yes, I mean, I'm a day trader by profession, so I'm now trading for my own capital, and that's sort of like my main income. But I also run like an education company, teaching others to trade as well, just to understand the risks involved in trading, the realities of trading. But so myself, I'm just a day trader, and trading for my own income.
Let's go back in time. Tell me how you started trading. What got you to trading in the first place?
Yeah, so, I mean, that's a longer story. I remember when I was doing my careers advice at school when I was sort of 16, 17. I was always quite strong at maths at school. And I don't say that because I think you have to be strong at maths to be a trader. I say that just because that was what I was strong at school. And remember being a careers advice, and they were sort of like saying, you want to maybe get into banking, finance, that sort of thing. So when I left school at 18, I wanted to get into the city of London. I lived quite close to London. So that was sort of like the path that I wanted to go down. So, I got a job at 18, made it known that I wanted to get into those sort of trading circles and stuff like that. And I got a chance in my early 20s to actually sit on the trading desk and actually start trading. So that was sort of like my very sort of first introduction into trading, just after I left school, and then that sort of progressed. So I started trading for a company in London. I moved to Hong Kong with them, and then came back to London. And then shortly after that, so in 2014, just got a little bit disillusioned with life in the city. I wanted a bit more freedom and flexibility in my own life and stuff like that. So I decided to quit my job in London and actually sort of like go independent and start trading for myself. And that's what's led me to where I am today.
Tell me about that transition from going to trading from a firm to then trading on your own. Was it easy to transition or was it difficult?
It's very different, right? So it's not like it wasn't a smooth transition. It wasn't like, okay, well, I just literally go from here to there and that's it, From when I was working in London, I had access to like institutional order flow. So I had like quite a lot of data. Obviously, I couldn't act on it in terms of from a personal point of view, but I had that information available to me in the way that I was looking at the markets and the charts and everything. But when I switched to an independent trader, I lose all of that. So, and obviously you don't just have the lack of it or the change of information that's available to you. You also have the emotional pressures of actually trading with your own funds rather than somebody else's or like a bank's or an institution's. So you have to, so there's a lot of working on the mindset. And that equally comes from, when I worked in London and Hong Kong and working from what would be was seen as a normal job, so to speak. Like, I knew I was getting a salary at the end of the month. Like, well, I worked my hours, I got a salary at the end of the month. All of a sudden, as an independent trader, you're not guaranteed an income. It's not like a structured income. It's not a set income at the end of each month. So again, it was very much an emotional and a mindset transition in terms of how to deal with that and how to cope with that and what structures and processes you need to put in place to be able to deal with that and still pay your bills and everything. So it wasn't like an easy transition. I think fortunately from the time working in that environment and trading, it gave me a good solid foundation of understanding risk and how the markets worked and the importance of stocks and everything. So I had a lot of foundations in place, but there was still a lot of changes and a lot of I guess like soul searching and sort of like really understanding yourself in terms of getting and building those skill sets in terms of the mindset to sort of really sort of progress as from that side into an independent trader.
Has the trading style you use changed from a firm to then by yourself, or was it the same kind of trading?
No, completely different. Completely different. So obviously, I actually worked on an equity derivatives desk in London, so it was a lot more futures and options based. Whereas now I'm sort of trading, indices, FX, that sort of thing. So I have developed my own strategies, and I would actually even say, I've been trading independently 10 years now. The strategies that I used when I first started to the strategies I use now are different as well. So like my trading's evolved and that, but yeah, so the mindset and everything like that was a thing, but I think as time progresses, I've evolved as a trader as well.
Why do you think your strategy changed over time? Is it because you change, you learn new things? Is it because the market stopped reacting similar like things they reacted before, or what happened?
No, I think it's a variety of things, things like, obviously I think as an individual, you always grow, right? You always grow as an individual. Like, so my knowledge base, my experience has grown, like my skill set has grown. I've generally always, from a relatively early part of my independent trading, I was looking at support and resistance. I was looking at like the key areas in the market where the market shifted, where that liquidity. So obviously, as I said, when I was in the city of London, I knew where the liquidity was and stuff because I had access to that order flow. I didn't have that, but I learned to identify that in the market. So my strategy, I guess, or the style of trade has always been identifying this support and resistance. But I think when I very first started, I would look for confirmation. So I would look for like reversal patterns. I would look for strategies and use a couple of indicators and things like that, looking to get into the markets. Like I say, looking for that confirmation. Whereas I think over time, my skill sets developed, my price action skills have improved, and just I guess confidence as well. Confidence has improved and has like in my own abilities and things. So I'm now much more sort of like like limit order placed rather than looking for that confirmation. I think it's just a natural progression. I don't think it's necessarily anything else. It's just like, it's like anything. When you do something repetitively, you get better at it, and it takes time. And you just, as human beings, we all evolve anyway. So I think it's just a natural evolution as my skill set's improved, I guess.
For most people, it seems like when you make it in trading, like when you get profitable, then you've got everything figured out from there, and everything is easy from there. Tell me about some of the realities you see now as a trader from like. It's been over 20 years that I do trading. So tell me kind of how things are now and what things are easy, what things are still difficult for you, and kind of how you adapt to it.
Yeah, I mean, I think you're right. I think people seem to think just turn profitable and that's all the answers, like all the answers. And I think, one of the other biggest issues that a lot of retail traders have is you're undercapitalized. And I think I didn't realize this when I very first started trading either. Like, I felt like, I had a really like a relatively decent paid job in London, and so I had a bit of money behind me. But actually, when you actually get into it and you actually crack the you crack the math on what you need to be able to return a decent income, it's the realities are very different. So I think a lot of people are undercapitalized. So it's not just turning profitable. You then need to get the capital behind you to be able to do it. So I was fortunate that I get funded through to trade to get the income that I need. But it's it's something that it's not just turning profitable and that's it. And equally, like I said, it's one of the biggest things is 1 month you might have a bit of a drawdown period, so you lose a bit of money, but you still got to pay your bills. Then the next month you make that money back, but over a 2-month period you're still actually pretty flat, so you're just making up your losses. So you need to structure yourself and your trading, and you need to treat it like a business, right? You need to structure it so that you can pay yourself and you can do that without it affecting your ability to trade as well. So I think that's one of the biggest issues. Other than that, I think one of the major issues that I've come across through sort of my coaching traders is sort of this inability to accept losses and stuff as well. So I think it's really important, or even like not just accept losses, but if your strategy is not setting up to be able to sit there on the sidelines and wait for that right moment to get back in. So I think as time has gone on, whilst other people find that when they're starting out, find that really difficult. For me, I've learned, because again, I guess it comes through experience, right? I've been through periods where I haven't traded for a couple of weeks. Even as a day trader, I may not trade like every single day, but to be able to have the confidence and the discipline to actually sit there and go, right, you know what, I know I'm following the right processes. I know eventually my setup's going to come, and that is what I need to wait for. I think that skill set and that mindset is something, like I said, that you don't have initially, that you really need to build on. So just turning profitable isn't enough. You need to build that mindset as well to be able to overcome those sort of difficult periods.
I love that. You totally summarized it well here. How did you get funded? Was it the prop firm? Was it private investors, or what got you funded?
Yeah, so it's private investors basically, sort of friends, family, business partners, that sort of thing. I do, obviously this trader funding prop firm route has become quite big in the last sort of couple of years. And I certainly think it has its place for the retail trader when they're sort of getting in to get, like I say, a lot of people are undercapitalized for what they want to achieve. So I think it's a good opportunity. I think it's just, you have to do your due diligence on the firms, right? And make sure that they're like, check the T's and C's and those sorts of things to make sure that they're the right fit for what you're trying to achieve. So, but yeah, I think there's definitely something out there for funded programs to help retail traders get to where they need to be.
Was your mindset the same trading for a firm before compared to now managing capital for like friends and family? Was it the same kind of thing for you, or was it different?
No, it's completely different. I think like, I guess because I started out, it was almost like quite black and white when I was trading for a firm in London, because it's just generic. Like I didn't have any emotional attachment to those funds. These big banks and institutions are putting up the funds. Like I don't have any emotional attachment to it. So I'm just, doing my job basically. I've just got to do my job. And like I say, whether or not that the strategies, because they were options based as well, like the strategies were quite complex. So it wasn't quite as vanilla as, you make money, therefore you get paid, because they're arbitraging, they're sort of like hedging risk and all of this sort of thing. So some positions lose money, but it's in the grand scheme of things that the whole strategy is making money. So it was just unattached, unemotional in terms of I was just going through the processes of doing the job almost. Whereas obviously now every trade has a consequence to it in terms of an emotion that I'm going to feel because it's people that I know and it's their money. So yeah, I think it's very, very different from an emotional point of view, trading for myself or for other people as opposed to trading at a firm.
I'm sure people are going to ask, what's your trading style? Do you want to share more about kind of what things you look at and what kind of trading style you focus on these days?
Yeah, sure. I mean, look, I generally speaking, like I say, I'm a day trader. I generally don't like to hold positions overnight. I found, again, it was one of the things very early in my career that, it would be the first thing that I checked when I woke up in the morning or something like that, if I had a position on, and it didn't make me, it wasn't good for me. It didn't make me feel comfortable. So I really like a day trading style where, I wake up in the morning, have no bias in the market. I can follow my routine, get showered, get dressed, do my mindfulness and meditation and stuff like that. Really go and sit down at the markets with a clear mind, and then analyze it with a fresh mind rather than having a bias. So I think that sort of suits me, and it's not for everyone. Some people will need longer term strategies, as in traders, but that was what really suited me and resonated with me. And from there, so that's sort of what I would classify myself as a day trader. Other than that, my style is really, as I said before, identifying the really key areas of support and resistance, and then attacking those. Because by identifying the really key areas of support and resistance, I have a real structure and a framework to be able to attack the markets, because I know exactly where I'm going to be entering my trades, because I'm not entering anywhere unless it's in one of my support or resistance zones. I know where my stop is, because if that zone breaks, then that zone of support and resistance is no longer valid, therefore I want to be out of the trade. And then your target is a little bit more subjective, but I have other ways of identifying that. So once you build up the skills of identifying the support and resistance, everything else becomes quite natural, quite easy to follow, sort of thing. So I guess that's sort of like, in a nutshell, would be my style is like, a day trader, price action, support and resistance. And I would say I'm very risk focused as well. Like, I'm very, very focused on the risk of each trade, very focused on the overall risk to my portfolio or capital, as you like, depending on which way you want to look at it, and making sure that emotionally any drawdown that I go through, I'm able to like just carry on going and making the same decisions and stuff like that. So really protecting the capital and letting the system play itself out, I guess.
I see people have a tough time with support resistance areas because it's tough to get it right the first time. How do you teach people, or how do they learn to draw the results correctly?
I think that's difficult. It's again, like, as I say, it is subjective, so it does take a little while to build up. I mean, what I always, the way that I teach, I guess, is you've got to look for, I mean, again, understanding the markets would be, the institutions and the institutional order flow is what moves the markets, right? That is where the big moves come in from that. So what I try and do anyway to look for those support and resistance is look for the repetitive behaviors, look for the repetitive areas in the market where at similar areas the market moves strongly in one direction, either as support and resistance. Support can become resistance, resistance can become support, or you have like multiple touches. Once you can see that, and this is not just any reaction, you've got to look for those strong reactions. So you've got those clear swing points all in like repetitively. Then you can see that there's been order flow from the institutions in the market there before, and therefore there is a higher probability, and I'm not going to say there is because, as a trader, we're looking at statistics. There's a higher probability that there's still going to be order flow there, and they're going to defend that area. And you know what? If you get the breakout, then that area can become support. It doesn't, and there can be order flow from the other side, sort of thing. So it's really, that's probably how I teach it. I mean, obviously, it's probably a little bit more in-depth than that through my courses and things, but that would probably be it in a nutshell, is looking for those repetitive areas in the market where there's been strong reactions from, because that would indicate that the institutional order flow is there, because that is what actually moves the markets.
Are you looking at fundamentals to back it up, or only technicals?
No, so I'm a believer that the fundamentals will show itself within the technicals. So I'm aware of fundamentals in terms of news releases and things like that. And obviously I have a bit of a bias, but ultimately, because I'm a day trader, the overall fundamentals may not actually really impact me on an intraday basis, because, even though you may look at the equity markets and go, you know what, the markets are obviously bullish at the moment, so therefore we want to have a bullish bias. 100% you want to look for the bullish bias. You want to really aim for the areas of support, the strongest areas of support to buy on pullbacks. But at some point, there will be a correction. That doesn't change the overall fundamental idea of the market. But, there will be a period where the market retraces. And on an intraday basis, I can actually have a bearish bias, even though the fundamentals say over time the markets are going to go up, So I'm aware of fundamentals, but I try not to let them impact my decision making, because I say from an intraday basis, if I let that bias affect my decision making, I can go through, it can be detrimental to it. Whereas if I go in with a sort of a bit of a fresher, clean mind, I can take advantage of all moves in the market, sort of thing.
So what kind of time frame do you look at for your day trading? Is it like 5-minute charts, or is it lower than that?
No. So I did used to look at sort of 1-minute charts, but I just found, again, for myself, and some people like it, like the quick reactions and stuff, but I found that I like a little bit more time to make sure that I'm analyzing and analyzing the markets. And obviously, the smaller time frames that you go down, spread can play a part in terms of your risk to reward and how that can impact your overall performance. So I do look at a 5-minute. I do a lot of my analysis. I would say the main chart that I do my analysis on is the 1 hour. So yeah, the 5, the 15, and the 1 hour are the time frames that I generally look at for my day trading. And I would say the majority of my levels are decided from the 1 hour chart.
What advice do you tell people who want to get funded? They want to make capital either from private investors or prop firms. How do they have to structure their trading to be able to get that capital and keep it?
Yeah, I mean, I think the bit of advice that I would give, and this is something I always sort of like talk to my clients when I'm coaching them and stuff as well, is like, you've got to get the process right first, because, if you go and try and get funded and you haven't got the process right first, you're probably not going to pass a challenge. And if you get lucky and do pass a challenge, you haven't got the skill set to hold the fund, hold the account and generate income anyway. So it's really, focus on that process first. Don't think about, having your own account, trying to make money from that. Just really focus on the process. Get consistency in your execution, get consistency in your strategy. And then once you've got that, then you really have the foundations to be able to go and not just get funded, but keep the funded account and then generate the income as well. So it's really, I'd say, focus on that process first. Do your due diligence on the funded programs, on the trader funding prop firms and things like that as well. Go with them and then just scale up. A lot of these funded, like these prop firms, allow you to scale up. So, but you're only going to scale up once you've got the process right and the skills in place. So really focus on that first. Forget, trying to turn $10,000 or pounds into $100,000. Like, actually just focus on the process, get that, and then you can scale up using the prop firms.
Where can people find you or connect with you if they want to reach out after this interview?
Yeah, so obviously, my company is called Keyzone Traders. So my website is www.keyzonetraders.com. So you can find out more about me, my background, and everything now. Or equally, I'm always happy to, I've been doing this for more than 20 years. I love trading. I love talking about it. I love just interacting with other traders and stuff as well. So if anyone wants to drop me an email, my email is ross@keyzonetraders.com. More than happy to chat to anyone and help anyone out with in regards to trading.
That's good. We'll put a link below for that. People can check you out and contact you directly there. And thanks, Ross. I appreciate your time and your advice here for the listeners. Hopefully they can get some value out of it and reach out to you and see what you're doing out there. I appreciate it.
Thank you very much, Etienne. I really, really appreciate the time.